Okay, traders, good afternoon. This is dollar yen on a weekly time frame. Every single bar represents 1 week's worth of movement, 1 week of price action. We can see here as we was approaching this 147.50, and of course the 150 level is an area that we have been watching quite closely. Now, any price action trader will see this is a sign of exhaustion. The largest candle that isn't at the start of a phase, typically sign of exhaustion, followed by sellers entering and a bit of an up down this week. So current price is below 147.50. It's a good area for us to look at opportunities. Now, if we take into consideration the last couple of phase twos, we saw 4 weeks and almost 500 points. And we saw a complete range of 3 weeks and over 900 points. So what we can see is the sellers are becoming more interesting the later we get into the move. So what we can see here is perhaps a deeper pullback. I don't think it will be a strong reversal. I do think we may see a perhaps lower high, double top opportunity to perhaps sell again at a more expensive price. But what we're going to look is at the short term and how we can capitalize from this move already. So we can see the daily starting to show sellers are in demand. We want to take into consideration that the weekly time frame, having been a few hundred pips, over 900 pips, has a lot of room for price action to move into. If we're talking the 20 moving average, the full range will be perhaps 10 weeks and over 1,000 points. So let's not get carried away. Let's look at the short-term aspects and how we can definitely get into these moves. Now, when we look at cyclicity, especially in the downtrend, we look at lower highs, lower lows, and that's the pattern that we want to see as traders to identify trend and understand where we can be positioned in terms of getting in at a turning point and understand the weight, sentiment, and direction for us to get in and out on each and every cycle. Some traders will have a preference to placing trades and holding. Me, myself, I like a smash and grab style where I'll look to get in and get out on price action once we understand and see cyclicity form. Now, we did have a fantastic opportunity on the break of this area here. You can see the previous rejection point, and look, I'm just going to bang a trend line in this area just to show you where we're talking. So as you can see, price supported lows, again back in here, a lot of congestion rounds here, broke through, pullback, retest, opportunity to short. Again, that does lie below the MAs. We like taking positions back below the 20 moving average when we're looking at momentum positions. It allows us to not try and outsmart the market by getting in at the earliest turning point, but allow the market to show us where we're going and simply jump on a train that's already moving. For momentum style based trading, we don't have to be aggressive in our approach. We simply have to get in, get out while the market's strong v weak. In this example, what we've seen this morning, the dollar's weak, and we're expecting and anticipating a stronger yen. There's a lot of fundamentals that will come into play to start to back this with interventions from Japan and so on. But in terms of a short-term outlook now, we definitely don't want to jump on a train that's already left. So be patient now. On a 1 hour time frame, the market is into a position back now where we previously rejected, but we're seeing price action come in where buyers are stepping back into the market. As you can see from a smaller time frame, we're getting tons of these wicks where we can see that buyers are slowly pushing price up, which is expected after a strong sell-off. The market never moves in a vertical line, it breathes, it cycles. What we want to focus on here is this 147.50 level, previously rejected. If you go back historically, you'll see this level is pretty strong. We want to look for the next lower high opportunity, essentially a more expensive price to become a seller at. Again, when we look at our cyclicity, as mentioned, lower low, lower high, lower low, lower high, we look at this pattern to continue performing so we can take full advantage of entering in an ideal entry turning point. So we want to look for a minimum of 3 bars pulling back into this 147.50. We then want to look for a strong sellers engulfing candle, and we will be looking personally at placing a sell stop order 2 pips below the first bearish engulfing candle that closes below 147.50. My stop loss would be plus 5 pips above the high. On average, on a 1 hour time frame, that probably give me about a 25 pip stop. And as an absolute minimum, we'll be looking to make 25 pips. Personally, as an intraday momentum-based trader, I'm not looking for these amazing, technical, beautiful, pretty charts. I'm looking to get in when the market's strong, when the market's weak, and take full advantage on explosive moves. As an absolute minimum, for price to continue in trend, it's going to have to break this low. So we want price to come up, rejection, smaller bar entry is more preferable, and back down, breaking past that low. For some of you that are more advanced and understand price action, you may want to look at placing a sell limit order. prior to price hitting your sell limit order and triggering you into a live trade, you're going to have to understand the type of price action you want to see. We, of course, in a phase 2 downtrend, buyers are going to be in demand. We need to see buyers coming out of the market, slowing down, essentially seeing very weak and petty buying. The weak petty buying with sellers becoming introduced as we pull back into that 147.50 level will be the ideal turning point that we see with buyers to leave the market and sellers to come in and dominate back lower. If you start to see strong bullish candles as we're approaching, we definitely want to remove our limit order because we don't want to be triggered in and price come even higher, stop us out, and then back down. So price action is the key here. When we are in a downtrend, we really need to focus on what we see. Strong selling, weak buying. Strong selling, weak buying, and so on. If we start to see the opposite of that, where we don't get weak buying, we see strong buying, and in that case, we may see a higher high in a downtrend rather than lower highs, lower lows, what we typically see in a downtrend. That'll be our indication of a potential reversal. I don't think that's going to be the case, but you definitely have to pay attention to the last highs, your cyclicity, the context and positioning of a chart, and most important, price action. So for those that are slightly more aggressive traders, you may want to look at placing a sell limit order, which will be at price 140. Oh, bear with me. Which will be at price 147.50. Your stop loss, as we discussed, on average is around 25 pips on an hourly time frame. So it'll be 147.75. And this is how the chart will look. By this point, your 20 moving average will catch up. We'll look for a bearish engulfing candle, monitor price actions as we approach the area, and look for a move back down. There's plenty more out there, guys. Remember, if we do see some stronger buying in terms of the yen and where it's positioned, then look across all your cross pairs. But for now, this is the chart to watch. All the best, guys. Take care.